In the last decade, the advent of new technologies and the evolution of information systems has strongly shaken the banking and financial ecosystem. Financial operators have deeply transformed their services. Our lives and our payment habits have radically changed, fully embracing the revolution brought about by digital innovations, and central banks have certainly not remained still in the face of these crucial changes, and are looking towards Central Bank Digital Currencies, or CBDCs, moving forward. A CBDC would be a form of central bank electronic money that could be used to make everyday payments, in essence a digital banknote. The impact the CBDCs could have on the economic and financial system is one of the most relevant issues. How the CBDC concept could constitute a game changer, with the potential to enable a change within the roots of the traditional banking system. So, what are central bank digital currencies? Central bank digital currencies, or CBDCs, are an attempt to bring some of the pros of private digital currencies to the world of public money, with the support of national central banks. This also means that CBDCs will, in theory, be safe in times of financial crisis. Comparisons are often made with cryptocurrencies, as some propose CBDCs could make use of the same blockchain technology. This is not necessarily the case. In fact, unlike the blockchain that is used by Bitcoin, which is a decentralized database, central banks in most cases are likely to control their own private blockchains. So, you may be wondering, why are governments trying to create CBDCs? The two main reasons are inspired by two potential challenges. The first driven by fears over private companies outstripping regulators' powers, and second by geopolitical concerns. Stablecoins pegged to the US dollar have seen massive uptake over the past year. The nominal value of the coins in circulation has risen from less than $30 billion to about $140 billion. While much of that is kept within the cryptocurrency ecosystem, there are growing efforts to use stablecoins for quick, cheap transfers. Regulators have raised concerns about private stablecoins on several fronts, including the challenges they might pose to the financial stability and the effectiveness of monetary policy, as well as consumer welfare. Some believe that an effective CBDC might reduce customers' desire to rely on stablecoins, or at least offer greater protection for retailers. People in favor of CBDCs say they offer benefits that have been often attributed to stablecoins, including lower costs and faster payment settlements than existing systems in some parts of the world. There is also discussion about their ability to implement monetary policy more effectively, such as providing economic stimuli after financial crises. A CBDC may help to further enhance efficiency in securities trading and settlement, but further exploration and experimentation are necessary. As always, there are the risks. One concern around CBDCs is that if they are introduced, it is inevitable that some people will transfer money out of their bank accounts and into CBDC wallets. Without safeguards such as limits on the amount of CBDC individuals can hold, financial instability could be exacerbated during periods of economic stress as people seek to replace bank deposits with CBDCs, which may be perceived as safer. To prevent their use in large-scale criminal activity, any CBDC system could not support anonymous transactions in the same way that cash can be spent anonymously. While there are design options that would provide some privacy safeguards, technical specifications alone may be insufficient to counter public concerns over the risk of state surveillance. Another risk may be that individual accounts could be compromised through weaknesses in cybersecurity, and the centralized CBDC ledger, which would be a critical piece of national infrastructure, could be targeted for attacks from hostile states and non-state actors. There is also a long-standing concern over financial inclusion that has only grown during the pandemic, as efforts to digitize money have been supercharged. CBDCs may be beyond the reach of those with older devices or without access to digital wallets, requiring care to avoid further disenfranchising the old and vulnerable. A CBDC could enable central banks to conduct forms of unconventional monetary policy more easily. Such measures may increase the bank's role and influence in the economy, and any changes to the bank's monetary policy toolkit would have to be scrutinized carefully. One of the few countries with a fully deployed CBDC is the Bahamas, whose Sand Dollar was piloted in 2019 and launched properly a year later, as a collaboration between the central bank, payment card group MasterCard, and digital payments platform IslandPay. Other leading economies in Europe and North America are still at the exploration stage, In the UK, the Bank of England and the Treasury announced a CBDC task force to coordinate studies of a potential Bitcoin, though it has yet to present any concrete findings. A lot of governments have not yet decided whether to introduce CBDCs. What are your thoughts about central bank digital currencies? Do you think it will be a wise move by central banks or not? Let us know in the comments below. We would love to hear your thoughts. If you enjoyed the video, please be sure to hit that like and subscribe button.